I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like this service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is the 25th. It's a Tuesday and we have the markets mixed here. Let's turn over to the grain hedge trading platform and see where we closed off the day. Corn trading down 2 3/4 cents, soybeans up 3 3/4 cents, and wheat in Chicago down 8 cents to $5 even on the December contract. Now keep in mind, coming into today's trading session, we saw Shanghai composite index trading down another 7.6% in response to the significant amount of selling that we've seen over the last month. We saw the People's Bank of China lower their interest rates by 25 basis points. We also saw them lower their required reserve ratio by 50 basis points. This is the fifth move to cut rates here since November in China. So in general, what we saw was quantitative easing. The U.S. equity markets reacted very positively to that, saying, you know, this is a good thing. And of course, we rallied up into the middle of the trading session in equities, but by the close, we were trading down in the negatives on the composite index, the Dow index. So that was a very big disappointment. To me, the way that we traded there was a very, very big negative. I wouldn't be surprised if we see some continuation to the downside in tomorrow's trade, and that could spill over into the grain, so just beware. Keep in mind that some of the selling pressure that we've seen has spurred a little bit of export sales. We saw some on Monday. We saw some again today. On Monday, 120,000 metric tons of new crop soybeans were sold to unknown destinations. Today, 210,000 metric tons of new crop soybeans were sold to unknown destinations. So we have seen a little bit of a pickup in export sales, but keep in mind we're only about 68% sold compared to where we typically are in the 4-year moving average around this time. So new crop sales for soybeans are still lagging. We're going to need to see more sales here in order to get up to the pace needed to meet USDA expectations. Let's take a look at the chart here because I think this is another indicator here where I'm a little bit nervous about soybeans. You'll notice this is a daily chart. Each one of these bars represents 1 day worth of price activity. And to me, yesterday what we saw was a gap down in the morning followed by exceptional amount of trade or trading lower. And then we were able to rally back by the end of the day, closing on the top half of the range during the trading day. Today we were able to rally back up. We were able to close that gap, get up around 890, but that gap offered up significant resistance and we ended up closing back where we opened. To me, this is concerning. Not only have we gone through the $9 support area where we had support back in June, but we also have a situation where in China, there is serious concern about their economy. When you have concerns about their economy, I certainly have concerns about soybean demand. Will it be as much as the USDA is anticipating? So that's another wild card here that is definitely going to be weighed by traders out there and will likely weigh on prices here in the months to come. Not only that, but you also have a negative USDA forecast on August 12th where the yield was significantly higher than where analysts were expecting, and then you have confirmation out of Pro Farmer in their latest crop tour when they went through the Midwest. They had many scouts testing many fields, and they came out with a yield estimates really only 0.4 bushels per acre lower than where the USDA is forecasting. To me, you have all these things combining into a relatively bearish scenario, and I am concerned about the downside here for soybeans in the weeks and months to come. When you look at corn, you'll notice that we were able to rally up a little bit, but unable to close above that 20-day moving average, which has acted as resistance here. Now with corn, it's not necessarily as bearish, but it looks as though weather going forward for corn isn't all that negative for production either. Weather going forward, it looks as though we'll get a little bit of precipitation in the northwest part of the grain belt this week. It'll be a little bit drier in the 6 to 10 day and more moisture here expected in the northern part of the grain belt belts in the 8 to 14 day forecast. In general, when you look at corn, the one thing that is supporting it is that the Pro Farmer Crop Tour had a yield about 4 bushels per acre less than where the current USDA forecast is. That provides enough of a deviation or enough of a difference between those two forecasts, I think, to give bulls a little bit of something exciting to think about. Now, in general, though, I don't think it's enough to start any sort of rally like what we saw back here in July, but I do think that it's something that could prevent significant sliding in the days and weeks to come, at least relative to soybeans, which I think is a little bit weaker. As I had mentioned, the weather outlook here looks as though it's going to be drier in the 6 to 10 day outlook. This week we'll probably be receiving rains in the northwestern part of the grain belt, and then the 8 to 14 day outlook, it looks as though the northern part of the grain belt is going to be receiving more moisture. Now that's a good thing. You're getting a little bit more moisture in the 8 to 14 day outlook will certainly help the grain filling stages here. It looks as though temperatures will also remain cool throughout the Midwest. So in general, that's my take on today's price action. I am concerned about the risk of prices declining here the rest of this week. So I do think that should be something that producers pay attention to. Make sure that you've been talking to any analysts or you feel prepared in case prices do start to slide. If you have any questions about what we talked about today, please give the office a call. The number is 877-472-4607. And remember, take a demo of our 14-day free trial. See what it's like to have live quotes in the palm of your hand. Put some practice trades on. See what it's like to interact with the platform that we have. It's a fantastic tool to use during your marketing year. Thanks a lot for tuning in. We'll see you here on Wednesday.